Hi, this is Ryan from De Jong and Phillips. Just going to take you through a frequently asked question that we're getting at the moment. Super good question, which is, should I purchase my electric vehicle through the business? Now, if you'd asked me 5 years ago, should I be purchasing a vehicle through the business? It's more than likely you'd be buying a petrol or diesel car, in which case I'll be telling you the tax consequences don't make it worth it in most cases. Fast forward to today, and you're looking at buying an electric vehicle through the company, my advice would be different. Because of the tax consequences of from a personal perspective being far reduced, but also the tax deductibility of that expense in your company also providing a significant advantage. So when we're looking at P11D consequences, this is the charge that gets added to your income and taxed for having personal benefit of a car that is purchased by the business. For an electric vehicle for the 2021-22 tax year, that benefit in kind charge is 1%. So to put it in context, if you have a £40,000 vehicle, £400 will be added to your income for tax purposes. Now, if you're a 40% rate taxpayer, then you will pay just £160 in tax to have the vehicle costs run through your business. So that means you don't have to take the money out of the business to pay for the vehicle costs, but also you can run all the maintenance through it and get a corporation tax deduction. So this is why it's advantageous at the moment to look at purchasing your electric car through the company. So when we look at purchasing the electric car through the business, we've got two ways that we would effectively manage that process. So we've either got purchase the vehicle or we've got rent it. So that's an operating lease. So if we tackle option one, which is purchase it, you've then got two considerations within that, and that's, do I pay it outright? So do I have the cash in the business to just pay for the vehicle? Or do I want to preserve cash flow and put it on a finance lease? And a finance lease is just effectively a loan after your deposit for the remaining balance spread over a term that's agreeable between you and the finance company. So in option one, when you're looking to purchase the car, either by that finance lease or outright, what you have to consider is the tax implications of doing so. So what the tax reliefs are and what tax reliefs you can't get. So if you're looking at VAT, so VAT, if you're purchasing a car, you cannot claim the VAT if it derives any personal benefit. So that's the first thing. However, the VAT element of that car itself will be included in the gross cost of the car. So if you take the gross cost of the car, which is VAT inclusive, say that was £40,000 again, then effectively in the year that you purchase the car, either by paying for it or on a finance lease, your profits for tax purposes will be reduced by £40,000. So that means that comes immediately off your profit and therefore reduces your tax bill in the year that you purchase the car. It's a very, very tax efficient way of purchasing a car with minimal personal consequence. The other option is you look at purchasing it or not purchasing it, you put it on a rental agreement. If you put it on a rental agreement, then effectively the tax relief isn't the £40,000 the value of the car, as you would see in option one. You only get the tax relief for the rental payments that you make in the period that you make it. So in the financial year that you've made 12 payments, you will get the tax relief against corporation tax on the 12 payments you've made. The other consideration you've got from that purpose is you can claim 50% of the VAT on the operating lease payments if you derive personal benefit from it. So you get some benefit on the VAT side, but you don't get the upfront corporation tax benefit. And in option one, you get the corporation tax benefit front loaded, but you can't claim back the VAT. Obviously, if you're looking at a hire purchase arrangement, that will have interest that muddies the water as well. And that needs to be considered in whatever decision you're making. So I suppose in summary, what I'm saying is you can manage your cash flow in both options, because you can either spread the cost via a finance lease or have it on an operating lease. So cash flow shouldn't be the consideration. It's ultimately what the benefit is derived from the individual options. So my suggestion for that would be speak to us. We can review your individual circumstances and prepare a schedule for what might be the most beneficial: operating lease, finance lease, or purchase outright. But the clear message is currently at the moment, definitely in the short-term planning landscape, purchasing an electric vehicle through the business is tax efficient. So please do speak to us. Thank you.